January 10, 2026, President Trump drops a bomb on Truth Social that sent Wall Street into an absolute meltdown. He announced he's capping credit card interest rates at 10%, starting January 20th, one-year cap. His exact words, "No longer will the American public be ripped off by credit cards." Now here's why this is massive. Right now, the average credit card interest rate in America is over 20%. Some people with bad credit are paying 30% or more. If Trump actually pulls this off, Americans could save an estimated $100 billion a year in interest costs. That's a billion, with a B. But here's the problem. Within hours, JP Morgan's CFO came out swinging, calling it very bad for consumers, very bad for the economy. Credit card company stocks tanked, and even Trump's own Republican Speaker of the House said this might not be a good idea. So what the hell is going on? Can Trump actually do this, and should he? Let's break down what might be the biggest financial showdown of 2026. Setup. First, let's talk about why this matters to you. Americans are drowning in credit card debt right now. We're carrying about $1.23 trillion in credit card balances. That's roughly a quarter of all household debt in this country, and we're paying through the nose for it. Interest rates on credit cards are sitting comfortably above 20%. That means if you're carrying a $5,000 balance and only making minimum payments, you're throwing away over $1,000 a year just in interest. You're not paying down your actual debt. You're just feeding the banks. Every grocery run, every emergency car repair, every Christmas gift you put on that card, it all gets hit with that 20% plus interest rate. Now, Trump didn't just wake up and decide to do this. He actually promised this during his 2024 campaign. He stood in front of crowds and said, "I'm calling for a 10% cap on credit card rates." At the time, analysts rolled their eyes and said, "Nice idea, but only Congress can do that. The president doesn't have that power." Fast forward to January 2026. Trump's in his second term. Republicans control both the House and the Senate, but by razor-thin margins. Midterm elections are coming up. Inflation's still a hot-button issue. People are pissed about the cost of living. And Trump, in classic Trump fashion, just announces he's doing it anyway, via Truth Social. No details, no explanation of how. Just, it's happening January 20th. Here's where it gets messy. Trump's entire political brand has been tied to business and banking. His real estate empire was built on loans from these exact banks. He's buddies with Wall Street CEOs. But last year, his administration tried to kill a cap on credit card late fees that Biden had put in place. They also slashed the budget for the Consumer Financial Protection Bureau, the agency that's supposed to protect people from predatory lending. So Trump's saying he wants to protect consumers from high interest rates, but he's also been gutting the very agencies that protect consumers and blocking rules that would have saved people money. The contradiction is glaring, and people noticed. Escalation. The second Trump made that announcement, Wall Street lost its mind. Within 24 hours, bank CEOs were all over the news warning that this would be a disaster. JP Morgan's chief financial officer, Jeremy Barnum, said, and I'm quoting here, "It would be very bad for consumers, very bad for the economy." He basically said if you force banks to cap rates at 10%, they'll just stop lending to anyone with less than perfect credit. Credit lines will shrink. People who need credit the most won't be able to get it. The American Bankers Association jumped in too, warning that a rate cap would push borrowers into even worse options. Payday loans, sketchy buy now, pay later schemes, loan sharks. Stuff that's way more predatory than a 20% credit card. Their argument, banks charge high interest rates because lending to people with bad credit is risky. If you cap the rate at 10%, banks won't take that risk anymore. They'll just cut people off. And it's not just the banks pushing back. Speaker of the House Mike Johnson, Trump's own guy, a Republican, came out and said Trump hasn't thought through the negative secondary effects of this idea. Johnson basically said, look, if you tell banks they can't charge more than 10%, they're either going to stop lending or they're going to slash credit limits across the board. That's not helping consumers. That's hurting them. And here's the kicker. Johnson also said Trump probably can't do this on his own. It would require an act of Congress. The president doesn't have the legal authority to just cap interest rates by executive order. So now Trump's fighting his own party leadership. But wait, it gets even more complicated. On the other side of the aisle, Democrats are calling Trump's bluff, Senator Elizabeth Warren came out and said this announcement is meaningless without an actual bill being passed by Congress. She reminded everyone that Trump's administration has spent the last year cutting funding for consumer protection, killing rules that would have capped late fees, and gutting the CFPB. She said, "If Trump actually cares about this, he'll work with us to pass legislation. Otherwise, this is just hot air." And she's ready to co-sponsor a bill. Bernie Sanders and Josh Hawley already introduced a 10% cap bill months ago. Alexandria Ocasio-Cortez and Republican Anna Paulina Luna filed their own version. The legislative groundwork is there. The question is whether Trump will actually push for it or if this was just a headline-grabbing stunt. Meanwhile, the stock market is freaking out. Shares of American Express, Capital One, Discover, Synchrony Financial, all the big credit card companies tanked after Trump's announcement. Investors are spooked. If this cap actually happens, these companies' profit models are toast. And if you have a retirement account with any exposure to financials, you felt it too. Key moments. Let's rewind and hit the key moments that got us here. January 10th, 2026. Trump posts on Truth Social. Effective January 20th, 2026, we will be imposing a one-year cap on credit card interest rates of 10%. No longer will the American public be ripped off by credit cards. Notice the date? January 20th. That's the anniversary of his second-term inauguration. The symbolism is intentional, but he gives zero details. No explanation of how he plans to actually implement this. No mention of whether he's going to push Congress to pass a bill or try to do it by executive action. Just the announcement. Boom. Done. Now, months before this, there were already bipartisan efforts in Congress to do exactly what Trump's now claiming credit for. Bernie Sanders and Republican Josh Hawley introduced a bill to cap credit card rates at 10% for 5 years. Not 1 year, 5. AOC and Anna Paulina Luna filed their own version in the House. So Trump's not inventing this idea, he's jumping on a bandwagon that was already rolling. But he's not endorsing these bills by name. He's just announcing his own version and taking all the credit. And then, the next day, Trump drops another bomb. He publicly endorses the Credit Card Competition Act, a bill by Senators Roger Marshall and Dick Durbin that would force credit card companies to open up their networks and lower the fees that merchants pay when you swipe your card. Trump called it the out-of-control swipe fees ripoff. So now he's not just fighting banks over interest rates. He's also going after the fees that Visa and MasterCard charge every time you use your card. He's opened up a two-front war with the credit card industry. JP Morgan's CFO went on the record during an earnings call and said if a 10% cap goes into effect, the supply of credit will simply reduce. It will be bad for consumers, bad for the economy, bad for small businesses, and yes, for us also. Translation: we'll stop lending, people will suffer, and our profits will take a hit. Wall Street CEOs reportedly held closed-door meetings with the White House, warning Trump that this could trigger a credit crunch and slow down the entire economy. But Trump's not backing down. If anything, he's doubling down. Climax. This is where the battle lines get drawn. On one side, big banks, Wall Street, investors, and even some Republicans in Congress saying this cap will destroy access to credit. On the other side, millions of Americans drowning in credit card debt, progressive Democrats ready to pass legislation, and Trump trying to position himself as a populist hero taking on the banks. The stakes couldn't be higher. If this cap goes through, consumers could save $100 billion a year in interest payments. That's real money back in people's pockets. But if the banks are right and they respond by cutting credit lines and stopping loans to anyone with less than perfect credit, you could see millions of Americans suddenly unable to get a credit card, unable to handle emergencies, unable to buy a car, or unable to cover an unexpected medical bill. And those people, they'd get pushed into payday loans charging 300% interest, into sketchy buy now pay later schemes, into borderline loan shark territory. The question is, which outcome is more likely? Here's where it gets really tense. Wall Street, the same Wall Street that largely backed Trump's agenda, that celebrated his tax cuts, that cheered his deregulation, is now publicly telling him to back off. Bank CEOs are warning that capping rates will undermine the entire credit system, that borrowing costs will skyrocket for small businesses, that the economy will take a hit. This is Trump's base turning on him, or at least warning him that he's about to cross a line. And experts are painting worst-case scenarios, Brian Jacobson, a chief economist, said banks will simply cut people off and force them into payday lending, that the cure could be worse than the disease. Trump's response? He doubled down overnight, endorsed the swipe fee bill, made it clear he's going after the credit card industry from every angle. The climax is here. Both the public and the power brokers are realizing this fight is going to reshape how credit works in America. Resolution. So where do we actually stand right now? Here's the truth. Nothing has changed yet. Trump made an announcement. That's it. No cap has gone into effect. No law has been passed. January 20th came and went, and your credit card interest rate is still the same as it was before. Because here's the reality. Trump can't just impose a rate cap on his own. Speaker Mike Johnson said it. Legal experts confirmed it. Even some of Trump's own advisors quietly admitted it. The president does not have the legal authority to cap credit card interest rates by executive order. That power belongs to Congress. So what happens next? If Trump actually wants this to happen, he needs to work with Congress. And the good news, or bad news depending on who you ask, is that the framework already exists. Bernie Sanders and Josh Hawley already wrote a bill. It's called the 10% Credit Card Interest Rate Cap Act, also known as S381. It caps rates at 10% for 5 years, not just one. AOC and Anna Paulina Luna have their version. If Trump throws his weight behind one of these bills and Republicans go along with it, it could pass. His party controls both the House and Senate by narrow margins. But that's a big IF, because even within his own party, there's resistance. Mike Johnson's already raised concerns. Other Republicans are hearing from banks and business groups in their districts telling them this is a bad idea. On the flip side, Democrats are ready to move. Elizabeth Warren said she'll co-sponsor legislation if Trump's serious. Progressive lawmakers have been pushing for this for years. So we're in this weird political standoff where Trump announced something he can't actually do, but Congress could do it if they wanted to. Meanwhile, the markets are jittery. Credit card stocks are still volatile. Consumer groups and banking lobbyists are both mobilizing. This fight is going to play out through all of 2026, and if the cap does somehow become law, get ready for massive changes. Banks have already hinted they'll respond by raising annual fees, slashing rewards programs, cutting credit limits, and tightening approval standards. One industry expert, Tiffany Funk, said banks might drastically cut cashback and points programs to offset lost interest revenue. So that 2% cashback card you love could disappear. Your credit limit could get slashed overnight. That pre-approval offer in your mailbox might stop coming. The entire credit card landscape could look completely different by the end of the year. Takeaway. Here's what you need to understand. Trump's credit card cap proposal is as much political theater as it is actual policy. He's tapping into real frustration. People are sick of paying 20 to 30% interest on everyday purchases, but it's also a high-stakes gamble. The core conflict is clear. Big banks versus everyday borrowers. $1.23 trillion in consumer debt is on the line. $100 billion in potential savings for Americans, or a potential credit crunch that locks millions out of the system entirely. And here's the irony you can't ignore. Trump is championing a rate cap while his administration has been rolling back consumer protections left and right. He killed Biden's late fee cap. He slashed the Consumer Financial Protection Bureau's budget. He's gutted the very agencies designed to protect people from predatory lending. So is this a genuine fight for consumers? Or is it a midterm year political move to win over voters frustrated by inflation and high costs? That's for you to decide. Here's what to watch for. Watch Congress. Will Republicans actually bring Sanders and Hawley's bill to a vote? Will they co-sponsor their own version? Watch the banks. Are they going to keep fighting this publicly, or will they quietly start preparing for a world where rate caps exist? Watch Trump. Will he actually push his party to pass legislation, or will this quietly fade away after the headlines die down? And watch your own credit card statements, because if this goes through, your interest rate, your rewards, your credit limit, and everything else could change. Your pocketbook is on the line, and now you know exactly how to follow the fight. So here's what I need from you. If this video just opened your eyes to what's really happening with this credit card battle, hit that like button right now. Subscribe if you want to stay on top of stories like this, the ones that actually affect your money and your life. And drop a comment telling me, do you think a 10% cap is a good idea, or do you think it'll backfire? I want to hear your take. Share this with anyone who's carrying credit card debt. They need to know what's coming. This fight is just getting started, and you're going to want to stay informed. I'll see you in the next one.